If you can hear me okay and see my cursor moving, please type a Y or a yes in the Q&A section there just to let me through. Coming through loud and clear, that's great. Thanks. Good to see you all and most appreciated. We're all set to go here then. We'll get cooking. So on the risk disclaimer, I know you've all seen it before. Most of you have. Just remember, it's always good to repeat it, to remind ourselves. I have to pinch myself sometimes too and remember that you must be aware of the risks and be willing to accept them in order to invest in futures and options. Be aware of the risk. Don't ever forget, this is a high-risk business, just like any business, and you're putting money on the line every time you enter a trade. So don't trade with money you can't afford to lose. That's very important. Don't dig into Johnny's college fund and try to keep the rent or mortgage money in a separate box somewhere. Don't go pouring that into your futures account. You're going to need that to stay in the pad and keep your trading office going. So in other words, just remember this rule here. It's very important. So we're going to be recording the session today, so you'll have all this information that may give you on a tape, that recording that I'll put on the blog as usual, and you can review it if you need to. Now, just a quick note here. I've been calling last 2 days for a stronger sell-off in the markets. Well, look at that. They cranked that Dow up. They've been rigging the markets up the last few weeks, especially with quantitative easing. They're not talking about it, they're not saying it, but I can tell by the way they're trading. There's been a lot of quantitative easing going on by the Fed secretly. They're jamming and rigging the markets up, and that's fine. Big whatever, Boomerang will trade around that, and I'll show you exactly how today. But sure enough, after pumping them up about 70 to 80 points in the Dow mid-session today, now we're getting that smash into the close with them closing down 48. So big surprise, not to us though, who follow my services. So what I'll do today is we'll go back exactly 2 weeks. You can see right here, if I go to the data series and I click down here, you can see I got 14 days logged in there. So we'll just go straight back and I'll go over as many of those setups as I can. However, starting out, first of all, I want to say one thing about the trade setups. There are only 2 trade setups. Boomerang doesn't have all these variety of ways to trade. That's your imagination if you're doing that. There's only 2 trade setups. Now, keep in mind, the first trade setup, which is a new crossover the dynamic trend bands, and I'll explain what those are in a minute for you who are brand new. In fact, let me do that first. I apologize. Before I get in this, let me just, because we do have a lot of new guests and friends here that are joining us for the first time, let me just quickly take 5 seconds here, go over the Boomerang components. This line here is called the trade signal line. That's this thin dashed line here. This thin dashed line here is called the trade signal line. It's one of the most vital components of Boomerang. It's something I invented after years of experimentation. What this thin trade signal line does is it's a real sensitive bias line, and when it changes colors, it actually colors the candles according to the color of that, and it gives real sensitive changes in the market. The second component here is what are called the trade channels. See this arrow right here? That's a new buy channel opening up here. And notice how it's shaded in green. You should be able to see that pretty well on the screen there. It's shaded in green. And if you can see it slightly changed here to a sell. This is going to be very important when I show you the rules of the 2 simple rules of trading. Notice this sell channel here changes and a slight red shaded channel opens up, and then it changes back to a buy channel again. That's due to the sensitivity of Boomerang and everything, but that's going to be one of the very helpful factors in getting winning trades for you, and I'll show you that in just a quick second. Here's the shaded buy channel up here running up, and then when it changes to sell channel, which is right here on this spike lower move, you can see the sell channel coming in here with the trade signal line running through the channel here. The second component here is the Cobra. That's this red dashed and dotted line here. You can see the Cobra running up through here. See that? That's a front runner usually of the market shifting bias in line with the dynamic trend bands. It's actually one of the trend bands, but the actual 2 dynamic trend bands are right here. That's this dashed I can't talk today. Dashed and dotted uh, dynamic trend band number 1, and this is dynamic trend band number 2 here, which is the thicker and solid line. Combined, these two here, the crossover, when these two cross over, the ratio of a market moving in that direction is very strong, about 80%. It's literally uh, the dynamic trend bands built into my system here that I develop are the only system that tells you in advance when the market's going to make an extended move. It's one of the features of Boomerang. I mean, that alone is worth a fortune. If you knew where the market's going to make a longer and stronger move, wouldn't you know? Wouldn't you have a real edge on the markets? Yes. Okay, so you have the trade channels, the trade signal line, the shaded trade channels, and the dynamic trend bands, and you have the Cobra. That's basically it for the chart itself. Now I'm running a standard 14 period, 2 standard deviation period Bollinger Band here because I like Bollinger Bands. They're used by hedge fund managers. They're used by many, many big players in the markets. They're a standard part of the arsenal of many traders. And what they do is they tend to form a nice band or channel around the Boomerang channels as well. And I'll show you later how they give us hints when a new market is getting ready for a trade setup. So that's the components. Now down here, this is bias index number 1, which is just a measurement of the bias of the market. Now you can see when a market's peaking, the small probes here inside of the histograms are going to reach up above this magenta line. They'll start dropping, and then when they start turning yellow, that's your first sign that the market is weakening here. And then as prices start building under the 0 line here, you can see they start turning red and building again, and the process repeats. This is bias index number 2, and generally, see, we've built Boomerang so you only need to use the dynamic trend bands and what I'm going to show you today for the trade setups. These are part of the earlier Boomerang versions. I've kept them in because they're so vital for reading prices. And a lot of traders, when you're sitting reading the markets, you kind of want to know when's this upside going to finish or when's it getting exhausted so I can get ready for my next reversal trade. Well, bias index number 2, which is this one, is really incredible for that because it shows you as long as they're green, that market's going to be moving up. And when they start changing to red, time for my cursor again here. When they start turning red here, you get an advanced warning that the market's ready to start moving in the opposite direction, the sell direction, the red color. Or with the dynamic trend bands, it's the magenta color and the azul bluish color. So I've just changed those colors so there's a contrast, and those show up nicely on the back black charts. Down here is Hyperscalp, and I don't have it built out. I'll show you. It gives you a very intricate reading into the price movement, and I just keep it on the Boomerang chart for purposes of like in my trading room and stuff like that. I don't use it for that purpose in the trading room, but it comes with full instructions and everything when you buy Boomerang on how to use Hyperscalp. You can actually use it as a standalone indicator and do very, very well with it. For our purposes, you can see it changing red here. It's a front-running instrument telling us when the market's getting ready to change bias. Notice how here we've got the bias index number 1 turning lower here, and the Hyperscalp also. That means this market is getting ready to peak up in this area. And you can see the shrinking histograms here. All this information combined, as you get really good with using Boomerang, this bias index reading will tell you when the market's ready to shift, and sure enough, down it goes. Having said that, now let me quickly go over the rules, then we'll go back over some sessions. There are only 2 setups, and that is a setup that is geared off the crossover of the dynamic trend bands. That's all what's happening, is everything's geared off the crossover of dynamic trend bands. And we do that in 3 different ways. First of all, if the market opens a trade channel here, now this is not a very good example because in our rules of Boomerang, when you have a steep sell-off, usually that very first crossover, although this trade did work out here, usually you're better off taking the second, in this case a buy reverse, which you see right here, after the DTBs have crossed. That's in the case of a steep sell-off. But the normal rule is that either you have a spread of 1.5 points on the DTBs or less, or you have a crossover, or you have the colors matching. See here, the colors are matching on the buy side. On the blue colored side, that's a matching blue colored side. So it's one of those three things for the crossover, but it's really one trade setup, but it's three different things. And that is this spread here. You just put your cursor up there, and you see that 650 on the far right over there? 650, and you pull it down here, and it says 375. That's not a 1.5 point spread. You'd have to get it like right here, 5, 75, and 4. Now there's approximately 1 point spread, so that would designate this as being a buy signal here. If you didn't have this strong sell-off, we would just be waiting. And I'll go over that in detail in a minute. We're going to go over dozens and dozens of trade setups so you'll fully understand. That's the those are the three conditions for taking a trade. Now, there is one slight modification, and I'll try to see if I can, well, we'll run into it, and I'll bring it up again when we run into it. I don't want to talk about it right now because I'll have to search the charts and find it. And that modification is if the market gets a dynamic trend band crossover and the price is like, say, for example, like here, they shoot off. Now, this one did give an early entry, so that was not a problem. But if they shoot off like down here, and you're just getting a brand new, absolutely brand new crossover, the DTBs, there is one modification that I talk about, and that is the only modification, and that is you can trade a pullback to the Cobra. If prices shoot down here, there's a brand new crossover, and like say right around this candle or down here, you're not getting a signal, a dot signal, but you can trade a pullback if the market shoots back up here to the Cobra. The reason is, the qualification for that is that you've got a brand new dynamic trend band crossover, and odds are very strong that market is going to continue in that direction. The second trade setup is shown right here, where you get an initial run up and a new trend has started and a crossover has occurred. You get a counter sell channel that fails. It fails to change the dynamic trend band number 2 to a reddish color. I'll just call it red instead of trying to say magenta and azul. A reddish color. If it fails to do that, you might even get some sell dots here. But then when you get a counter buy channel, that's your second level buy signal there. And you can see 44.15 even on that signal ran up to 44.20, so you got your 3 points right there. So we're just trading for 3 points on these moves. I know that's small, and I know they run significantly more, but it doesn't matter. I know that may seem astounding, but here's why. If you're going to get 90% winning trades with a 3-point move following my exact rules and system, and you're going to get 5, 6, 7, 8 of those a day, that's a lot of money. If you want to catch a big move, that's a lot of risk. 3 points in and out, and we get a lot of trades. The fastest I've ever seen it fill is 7 seconds. I bought them, and it's filled before I even the little electronic lady saying order filled, and before that she's back talking again saying the trade's closed. Here's my philosophy on this, and this can only be done with Boomerang. Get really, really, really good at coming to these trainings and following the exact system I give for training with Boomerang, and put on more contracts. Because most of the guys who want to brag about catching the big move are the one-lot traders or two-lot traders. All you got to do, okay, so for example here, so you get long at 44.15, right? And we get out at 20 up here, or 23 or 18 for 3 points. And you go, oh, but look at how far that market ran up. Okay, so 44.15 to what? The highest you could have got is 44.35 at the top tick there, right? So that's 20 points, right? Correct? You with me? That's 20 points on one lot. So if you get really, really good at Boomerang, you're going to build up your trading account from all the winning trades, and you're getting so good at the method, instead of putting on 2 contracts for 3 points, put on 4. Put on 6, put on 10. So if you get 3 points gain times 10 contracts, that's 30 points, right? Well, there you are. And you did it in the same speed and probably about the same risk, because they're going to run up in the forces on that side of the trade. But your risk in catching this, in hindsight, it's like, oh, you could have held and they would have went up. Well, that's true, and the dynamic trend bands crossed. And look, let me be honest with you. After you get really good at using, in my live trading room, I make 10 and to 15 point swing moves all the time. That's because I know how to use Boomerang. I'm very experienced in it. I developed it. I know how to use it, and you will too. But I'm saying, just starting out, just get really good at 3 points. Get those 10 contracts on there and get them off right away. And you'll get the same dollar value as catching this big run with 1 or 2 contracts. You see what I mean? If you think it through logically of what I'm saying right here, you'll realize that catching the big move, a lot of that's just ego. Oh, I caught the big move. And a lot of traders are suckers for that, because they think, I caught the big move. It doesn't matter. It's how much cash you put in your pocket. See what I'm saying? So, having said that, we only have those 2 trades, which is the crossover, the dynamic trend bands, a trade centered around that idea, 1 trade, and if the market allows it, a second level trade within the trend, which is, I just showed you, is right here. Now again, this particular setup, I just want to cover this with you. One of the rules, we have 3 rules for Boomerang, but one of them is that if you get a strong move in one direction, the general rule is to use, you're not going to want to take this first crossover when the dynamic trend band is really steep. Trading against a steep dynamic trend band is one of our rules. Do not trade against a steep dynamic trend band. Wait for it to flatten. And what that usually means is ignore the first one. Let the market, in this case, make a second level counter move, which is even more validating when you get the second boomerang buy here. All the colors are matching. You have a failure of a second level move. Now you have a new buy trade here, and it's just even more confirming that you're going to get that trade. Does that make sense? Okay, so here's the big thing with Boomerang, and a lot of new Boomerang traders, maybe 2 out of 10, I'll get into this with them on the emails and stuff. That's where I do a lot of my training too, is answering email questions. And that is, they've got these old habits and they're used to losing. That's why they bought Boomerang. The problem is they'll buy Boomerang, they won't attend my classes here, they'll carry over all those bad habits, and they just start guessing on what is a buy or a sell trade without studying very carefully and practicing and really intensely studying what the exact rules are. And then they'll find out that I'll get a lot of emails that go, yeah, I finally really started watching your webinars, recordings on the blog and everything, and yep, you're right, all the trades win, and stupid me, I was just trading my old bad habits. I say, well, don't beat yourself up over it. Just start new, get the new habit, and truly you will come to work and find your trading to become very pleasant. That's another part of what I want to say, though, is that this is a job, not anything unlike sitting at a desk for 8 hours and processing orders and doing files, doing reports, and doing important things. I know, hey, I did it for 20 years. I was a sales executive for 20 years. I was a director of a company. I was handling the big accounts. I worked the streets as a salesperson for some new products. In fact, one of them, I'm proud to say, was the world's first portable car phone before cellular came out. One of my first sales jobs, and man, I just soared with that because everybody wanted it. I sold it to famous movie stars, and Fleetwood Mac, the rock band, ordered a bunch of these portable car phones from me, and Burt Reynolds and all the stars of that time. But just a lot of executives. Later, cellular came out, and well, c'est la vie. There went that position, Cellular, everybody started asking, well, I heard about this thing called cellular, and it was like an injection that I couldn't overcome, so I moved on. But the point is that I know what it's like to sit all day and work the phones in sales. Sitting at the phone or at the desk all day, getting reports out, following up with sales, following up to make sure customers are happy. I know what that's like, very much so. Now, if you're doing that now or you have done that, just compare that to what try to listen carefully to what I'm saying here. To make an equivalent income with no ceiling on it. Every job I had like that, pretty much, except in sales, you don't have a ceiling because you can always sell more. But the point is that there's no limit in trading to what your ceiling can be. But if you treat Boomerang just like a regular job, and you go and sit at your trading desk like I'm doing now, and here's the big key, wait for the exact setups in line with the rules, you will be amazed. You have the time to sit there, and you're not really doing much. You're just watching the charts. And you have to listen and compare to what your other work was like and how much, the responsibility that was every day. You see what I'm saying? So with that in mind, let me proceed to show you the trade setups live in action here. Now keep in mind, this is important too. These dots in the signal line don't move once the chart is a flat chart. In other words, not a live chart. Those dots printed on the signal line, and I could go back a year, and the dot that printed a year ago on the signal line at that exact second, in this case when I got my cursor now at 10, 44, 45 seconds, is going to be there. So therefore, it's easy and very correct for me to show you the trades on a still chart and have them be just as accurate as they would be any time. Now, I realize that when you're trading in a live market, things change. But at the same time, another thing that's stable, like the dots in the signal line and all the Boomerang setups here and the dynamic trend bands and everything, is the rules. The rules don't change because the market's whipsawing or flipping around. We have rules to handle that. The only thing that changes is your emotions. So if you let your emotions get you into an incorrect Boomerang trade, that's a different issue. And that comes with practice and skill and learning how to do this. So I wanted you to keep that in mind. Like everything else, this is a job. Every job has a grind. Our grind is sitting and waiting for the correct Boomerang trades. It's a nervous business. You get in the position, and you want it to go your way. You're not guaranteed or assured it's going to go that way, but 90% of them, if it's set up correct, are going to go that way. Now, picture that if you're working like a sales desk or something like that, and your company ran some ads and a lot of calls are coming in, and you're excited, you're taking a lot of those calls. There's no guarantee that those people are going to buy. You have to put maximum effort into basically, impressing them that you're a reliable person, that your company is rock solid, and that when they buy this product, it's going to do exactly what you say. And that's a 2 or 3 level process usually before the money comes in and you get the commission on that sale. So similarly, I'm just trying to compare so you understand. And I have that background, so I've did this with myself. When you have to sit and wait for the Boomerang setups, that's a piece of cake compared to having to go at a job and you have to be there for 8 hours. That boss wants you there for 8 hours. Boomerang will not necessarily require that. So with that in mind, let's go over today's trades and I'll show you exactly what I mean. Okay, I'm going to speed up now. So get ready, take notes, hold your questions, and we will go over those with you later. But the main idea, by the way, as far as the dots in the signal line, I'm saying those are dots that are there that show up when the trade hits the signal line. The main idea is not waiting for the dot necessarily, but the way you want to trade. Let me pull this one over here. For example, here's a trade setup right here with Boomerang right off the opening today. This is a West Coast chart, so it shows 6:30 instead of 9:30 Eastern Standard Time. See that spread there is less than 1.5 points. Here's a pullback signal line. It marks it on the dot, but what I want you to do is these colors will be gray unless they're on the live thing. But you want to watch for the price marker right here at 43, you want to watch for the price marker to merge here with the signal line at 46. In other words, don't necessarily just wait for the dot. You know that, I guarantee you that if it's within 6 candles of this new trade signal line here, that dot is going to print on the signal line. It's just a marker for you, and it's going to put off an alarm. But you want to be watching in the far right side of the chart, and when that price marker comes up and merges into the signal line, you go ahead and you hit your sell button up here. You don't have to wait for the dot to get in the trade, because sometimes the dot will hit and it'll drop, half a point or more. Sometimes you get some slippage, which is fine, and the trade will still work out in most cases. But you want to watch for here. That way you're not even concerned if the dot prints in the signal line or not, or whether it stays there. It doesn't really matter. The idea of the boomerang system, and I should explain this too, is when we get in a trade, we look for the trade channel. We compare step 1, 2, and 3. We look for a new trade channel open. We compare to see if the dynamic trend bands are one of those 3 things. They're either 1.50 spread, which it is showing right here, or a direct crossover, which means they've actually crossed over, or they're matching colors. One of those 3 things, and then you can trade that pullback signal line in the trade channel. And you want to get the earliest dot as you can along with the rules. So here you'd have to wait 52.75, 50.75. You'd have to wait right here until that spread's pretty tight. And usually you can just eyeball it and see how when they're this close and that tight, then you trade this dot down here. See what I'm saying? That's where you'd place your trade, but you'd want to look over and watch for the price marker to merge with the signal line, which is shown here. See, if I come all the way over here to the close of the day, you'll see that they're all colored. See, the signal line is colored right here, and here's the price marker. I've got it in this black color, 44.06 half. So just so you know that. So that's it. That's all there is to learn, except for the 3 simple rules, which is don't trade against a flat dynamic trend band, don't trade against a steep one. And after a long extended move, usually you look for, let it stabilize, watch for the colors to match, whatever. So let's go over today again first. I'll go over them really kind of a little quicker so we can get through this webinar. We were already half an hour into it, so let me get on the ball here. Okay, the market's opening right here, a couple minutes in the market. You see a new sell channel come in. You're watching for this spread. We just went over this trade. The spread tightens up here on the DTBs. You go short right here at the market, 46 quarter, and down they come to 35 for almost 11 points move. So you caught 3 points there. You got a new crossover of the dynamic trend bands. So if you get a counter move, which you do here, it actually was powerful enough to change the color of the DTB here, but there's no trader because of this fast run up. You can turn your head to the left. You can see it created a fat channel or like a bubble there. Don't take that trade. Just wait and see what happens. It's a flat dynamic trend band also, so you have to use caution on trading with that. You see what I'm saying? So watch here as they move down lower and they create a new sell channel. The dynamic trend bands are matching, which was one of those 3 conditions, right? The 1.50 spread, a direct crossover. In other words, that's where the DTBs have already crossed over, or matching dynamic trend bands. So when the new sell channel opens, there's your first pullback signal line, and big giant move to the downside for 3 points. You're just taking 3 points out of that. Remember, if you want to catch the big move, that's fine. I'll show you eventually ways you can do that if you attend these trainings, but I'm trying to do just the basics now. The basics will make you a lot of money. I get emails every day. You wouldn't believe it. I mean, people are just in tears practically. They've suffered for years losing money at futures, but they're committed. They find Boomerang, and it's like, I'm winning on most of my trades. Oh my God. It's like, it's very exuberant, overjoyed feeling. Big downside move here. Okay, so that's the third or second winning trade of the day so far, and you're only an hour into the markets. You're waiting patiently. Here's a new crossover. Look at the nice tight spread here, right? Is it completely obvious? Here's a new buy channel opening. That's your first signal. Watch for the buy channel open. Really tight spread right literally at the crossover by that first pullback to the sig line there. Up they go. 3 winning trades in a row. That's 9 points. Market runs up. They got a wide spread here, so they're probably going to reverse. When you get a wide spread like this, usually you're going to watch for a reversal. Generally, the rule is if they start spreading over 5 points or more, there's going to be a reversal, which there is, but there's no trade set up here. Why is that? A little quiz for you. There's no trade here because the dynamic trend bands are not within a point and a half of each other, nor are they matching color until they get to here. And it's too late now because that just formed a big fat channel on this heavy swish to the downside. So no trade there. But that's no problem because all of a sudden a new buy channel opens up. The dynamic trend band number 2 is the blue color, the buy color. So you're good to go. As soon as this pullback comes in here, you buy the pullback to the sig line at 34.75 and up they go. 4th winning trade in a row. This was not a trade here. It worked out, but it wasn't a correct trade. Now they run up again, and they go into a heavy choppiness mode here. See, now all you did was wait for the very simple and correct boomerang setups. That's all you did. Just sat at your desk, and you can multitask around because between boomerang trades a lot of times, you have to be alert to the trade, but you can check out the news or watch some other things, do whatever you want. Watch some golf games or whatever and just keep your eyes on the charts. Hey, it's better than sitting there with the office politics and all the things that go on there and having to work all day and work hard and gather reports and make phone calls and go out on meetings. I'm just showing you here's an alternative. Okay, we're coming into 1 o'clock now on New York time. The dynamic trend bands are still crossing on the upside, but they're starting to falter. Look at that Cobra crossing over here. Going slow on the first day here. This is today's action. Cobra is starting to cross over. That's your first sign. Things are starting to falter on the upside. Right there. See that? There's the dynamic trend band. You with me? Can see it. I want to make sure you can see this exactly. There's the dynamic trend band right there making the crossover. Here's the new sell channel. There was a pullback sig line and an alarm went off and a dot right within the sell opening arrow channel on the first candle. And then there's the second one right there. Boom, down you go. 5th winning trade in a row. You see that? That crossover is right there. There's the sell channel. There's your pullback. If you didn't catch this one here, they were gone. They were just getting smashed to the downside. Now we're getting in the later afternoon, and here's another example of a steep dynamic trend band. They're trying to trade them here. Did work out. You can see that it flattened out. The spread here, 575, 450 was a 1.5 points. So if you bought this here, 13.25, they pulled back against you to 10.5, a little bit of pressure, but 13.25 ran up to 20. So that's your 6th winning boomerang trade in a row. Now again, if this dynamic trend band was steeper and these were not that tight here, there's no trade there. You have to have the right setup. Here again, look at this classic second level or trade here. Here's a counter sell arrow opening up a downside channel against the new crossover, upside crossover trend. A couple of yellow dots even. A new buy channel, a pullback the sig line here at 15 and up they go. 3 points. This is one we went over earlier. Nothing to do here. And then you can see, like I was showing you, from the symptoms here in the hyper scalp, and the bias indicators, the market was ready to falter and turn around, smash to the downside. Now here is where I want to show you that modification I was talking about on the new crossover dynamic trend bands. If the market gets hit real hard, in this case with a correct setup, that didn't really occur till right here when the colors matched, but they've already smashed to the downside pretty hard. They've made a big move. This is a little bit, it's easy to figure out, but you just have to be ready for it. It's a modification. If this happens, rather than just abandon the trade and say it's a fat channel, your condition that you're counting on is a brand new, absolute brand new crossover of the dynamic trend bands, and in this case they're matching color. Then you're permissioned by the system, by the rule, by this modification that I'm making, to go ahead and short them at the dynamic trend, or at the Cobra right here. You're permissioned to short them right when they hit the Cobra, and you can see they traded the Cobra a little bit through it, and then down they went for the 8th winning trade in a row. Now that's a modification I've tested and I use it every day. It's pretty valid. Sometimes, like all things trading, you gotta have this brand new crossover. You can't, if this kept going down and you're way out into this area and you get a move up to the Cobra, it may or may not hold, because if they've extended lower here instead of backing up like this, they've extended lower, lower, lower here. Now you're way out after the crossover. A pullback to the Cobra might start a new uptrend, and you might get stopped out. So it's got to be brand new and fresh, fast run off that. In other words, showing a lot of selling energy there. Brand new crossover, which you can see them crossing right on this candle, and then a quick pullback to the Cobra. That's your ticket to go ahead and short them again. And we're into the close. Now, before I go on with some of the other setups going back, that's 8 winning trades. And all you did was sit at your desk from, in this case, because after the first hour, usually you don't want to be trading this. I know this one came later in the day, but I just want to give it as an example. But even if you go the whole time, I would avoid mostly the last hour. But 6:30, 7:30, 8:30, 9:30, 10:30, 11:30, 6 hours. So instead of having an 8 or 10 hour work day, you got 6 hours, and a lot of that was spent on this day today just hanging out, waiting for the exact right setup. Now let me do the math for you. 8 points, or 8 trades, or you had 8 winning trades, okay? So that's 3 points times 8 trades. That's 24 points. You with me? Each point is worth $20. So if you, and the commission should be for retail about $4. $4 or maybe a little bit less if you can talk the broker down a little bit. So $60, or no, $20 minus 4 is $16. No, that's not right either. Let's first do let's subtract it out here. We got 8 trades. 24 points times $20. That's $480. Okay? And you've got 8 trades. So that's 8 times 4 is $32. So your net per contract on today on a one mini NASDAQ is 480 minus $32, $448. You see? Now where it gets exciting is that's not bad. That's almost $500. But if you did 2 contracts, you made $896. If you did 4 contracts, which is what I call a blue collar working trader, you got a small $5,000-$6,000 account, little in reserve, and you traded today 8 winning trades with 4 contracts, you made $1,792 after commission. Now that is a darn good paycheck for, taking a little risk on trading. If you did 8 contracts, you can see where it goes from there. If you're trading 8 contracts, that's $3,584. Having a relatively easy day. That just shows you the potential. Okay? So I want you to understand all that. That's really all there is to this. You can use your boomerang chart and just follow the markets doing this every day. Now, I've got about 20 minutes left. I'll end the session, the recorded session here, and we'll go over your questions that you may have in great detail. As those of you know who come to our sessions before, I sit here and burn the midnight lamp until we got all your questions answered. You're completely comfortable. All right, so here we go. I'm going to go a little rapid fire here. Here's the market opening. Here's a Cobra coming to. I may sound like an auctioneer here talking high speed, but I'm used to doing it every day in my live trading room. I'm just going to go through them, and you'll have the recording if you want to go over it and stop it and start if you want. So just bear with me. I want to get through this. Here's the opening right here. West Coast chart 630. Here's the dynamic trend band squeezing together. Your first trade there. Down they go. 3 points there. You're waiting for the next turnaround. You're waiting for the turnaround. Here's a leap higher, pulling back here. Right there, dynamic trend band crossover. What's the rule? They're leaping higher too fast. It's forming a fat channel, but you got a brand new crossover. What's the rule? Buy the pullback to the Cobra. That's right, which is right here at 16. Got a little pressure against you, about 2.5 points. 16 runs up for 3 points. They run up all the way here, waiting for the next trade. What do we got here? We got nothing, because you got a steep dynamic trend band. It's starting to flatten out, and the spread is here, but they've already ran lower. And even when you're coming in here, there's no short here because this is the bottom of a fat channel, and they shoot up, and now what do you have? You have a new buy channel. The market shoots up, and you have the dynamic trend bands are now one of the rules of their matching color along with the Cobra. You buy this pullback to signal line here at 29.50, and up they go to 33 for 3 points. You got another. Now you have the dynamic trend band crossing under the Cobra, which is a caution for the market to get ready for a sell here. The dynamic trend bands match color. You get a new sell channel here. If you didn't take this signal here, you can take this one down here because you got a brand new matching trend bands here. Boom, down they go. I think that's the third or fourth winning trade in a row. I'm not counting. I'm trying to go through this here. Here's a channel moving down, a trend band moving down, a slight change, a slight reset here. Because if they change the color of the dynamic trend band number 2, that's a reset on the prices. So no trade here because you don't have everything matching in the right sequence. Usually you're going to want to see dynamic trend band above dynamic trend band 2 on the crossover. You're going to want to see the Cobra above there. So that's not the right stacking sequence, obviously. And you get a new sell channel. And down here is another winning trade here on this pullback to sig line here. This actually, though, by changing this DTB, it reset the pattern. So we can take a second level trade on this pattern here because this change of the DTB reset it. I'll show you what I mean in a minute. So here's another 3 points. They go further. Here's a counter buy channel. Now the market's getting hammered. You got a counter buy arrow. Now you don't need to see dots, just that arrow has to print. And then a counter sell arrow, and they fell right off the wagon there and didn't give you a pullback sig line, so no trade there. And they get hammered further and further, and you got a steep dynamic trend band, so you do not want to take this first trade here. Although you're getting the crossover and everything, you do not, as I mentioned earlier, one of the rules, it's a steep dynamic trend band. I know they're flattening here and they're crossing over, but they've already shot up here. You're better off just waiting and see what happens next. And what happens next? A new sell arrow comes in here as the prices flop back lower. A new sell arrow comes in here, and you've got all the dynamic trend bands matching right here. Pull back the signal line, and down they go for like, I think, 5th, 6th winning trade in a row on this day. And look what the time is. You got 6, 7 winning trades. It's only an hour and a half into trading. This is a very busy day. You see that? So here's level 1. Now this was reset because the DTB changed colors. Level 1, down they go. Here's a same thing, a counter buy arrow on a steep down trending move that fails. Even though it's printing these dots here, you don't have anything to base a buy on because they're not matching colors, and it's just a counter buy channel, and then you get the counter sell channel right here. All the trend bands are matching. Go short right here, and another 3 points for, like, I believe it's 6th, 7th, 8th winning trade in a row. Now the dynamic trend bands cross over on this new buy channel right here, crossover and match colors. You can trade a pullback the sig line here, and up they go for like the 9th winning trade. Again, we're getting a lot of these today, so it's getting a very good example. New trend up, counter sell channel that fails because it didn't change the color of the DTB. A new buy channel and a classic pullback the sig line here on the new buy channel. You can buy that with confidence for the 9th winning trade in a row. Now notice the difference in this and a steep dynamic trend band. If you put your cursor right up there, you'll see what I call the pizza slice. You put your cursor right up on the DTB. Notice the DTB goes here and the cursor line goes out here, and that's like a little thin pizza slice, right? Well, look what it looks like if you put the cursor right here. Going out here and up here, that's a big thick pizza slice. See? That's a football slice of pizza there that you can grab when you're watching the game. But up here, you put it up there, you don't want that thin little piece. It's not going to get you far. But that tells you can short the new channel when the spread is 150 or less. 97.75, 96. It's darn close here, so you probably missed this one. However, in accordance with the rules, they've smashed down here. The spread is now right here. There's a brand new crossover coming in here, right? So what does that permission you to do? That's right. Trade them at the Cobra right there, 91.75, and down they come to 84.75. Perfect. Same thing here, a new crossover and downside channel. We just traded the modification on the Cobra, and now we got what? A counter buy channel. Again, very fast moving market, a lot of action. But it didn't change the dynamic trend band, and we're in a brand new crossover. So that tells you, get ready, because if we get a counter sell channel, we're going to want to go short if we get the right setup. Counter sell channel comes in, but they just fell right off the wagon. There's no trade down here because that's a fast move. 1, 2, 3, 4, 5 candles swooshing the downside. If you turn your head to the left, you'll see a big fat belly there. You can't trade that. You got to wait, and you don't want to trade the pullback to the Cobra, although it worked out as a trade, because what rule would that be? Why wouldn't you want to trade the pullback to the Cobra? That's right, because it's got to be, that has to be close to the crossover to validate that modification, and that occurred right here, and right here, and right here, but not down here. You got to let this one go, let it figure itself out, so they shoot higher. And you got the dynamic trend bands matching, but they've shot higher and formed a fat channel. That's the third rule. No flat DTB, no steep DTB trading against those, and don't trade against fat channels. So here's a fat channel, but guess what? What do we got? A brand new crossover coming in here, so that permissions you to go ahead and trade at the Cobra, which is our modified condition that you can use to trade this. So 86 pulls back here and just barely holds a stop. It's a scary move, I know. That's because it's at the end of a massive a strong downside move. It held the stop if you got long at the Cobra, hence the modification, because this brand new crossover, the force of that upside move is generally going to save the trade. So they just barely saved it here, and they grabbed them down here, yanked them back up, and your 86 entry shot up to 97, so you definitely had 3 points in there. Now they're on a tear. Forget it. They're on a tear now, and they're going to go higher. Nothing to do. No second level trades here. None here. Just waiting, 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 and now, aha, the dynamic trend bands are crossing over. So that tells you as soon as you get a sell signal, you can take it because they've already crossed over. That's one of the 3 rules I told you. A 1.50 spread, or a direct crossover, which is what we got here, or matching dynamic trend bands. So right here you got a direct crossover, sell channel, pullback sig line, down they go. We're getting late in the day into the final 2 hours. I think that's got to have been the 9th, 10th winning trade there. Look here, it's all classic stuff here. Second level move. counter buy channel, which of course is not a buy signal. Sell channel, pull back the sig line right there at 04, all permissioned, all matching colors right in the second level. It's a permissioned, authentic sell level 2 here at 375, and down they come to 97.5. That's why we don't worry about slippage with Boomerang too much, because I've designed in the system to accommodate slippage. Now, as a general rule though, if the dot here is marked, the pullback, the sig line, the reason the dots are there, one of the reasons too, is you can quickly reference those. You see that? However, what I was going to say is if you're too slow or something happens or you hesitated because of emotions and you didn't get short here at 375 and you got short at 1.50 or worse, for example, here would be like if you got short at 2.25, 250, just for whatever reason, or the slippage was that bad, which it could be, just scratch the trade immediately. You look here and you go 375, oh my God, I'm filled at 2 even. Just go up here and hit close. Just scratch the trade. Don't take a risk because, yeah, they may fall lower like here, but they could catch support and leap right up in your face and stop. Yeah, there's no reason for that. For whatever reason, slow due to emotions, due to whatever, a little bit of lethargy, you were looking at some other thing on the internet instead of watching the market, whatever reason you got in late, just scratch the trade. Don't worry about it. All right, so they shoot up here, and this is what I'm saying. Sure, 375 went down here, but say you got in 2 on a wrong trade, 150 or worse away, and they went down, and you start holding out for 3 points, and they go 2, and they go down to even 4,300 even, and then this happens, you're going to be kicking yourself. So waiting for the next trade now, and that's like I don't know, God, winning trade number 10, no losses today. Now you're getting the choppiness off this move here. Look at the whipsaw coming in. That's all right. Don't let whipsaw intimidate you. Just follow the rules. Crossover the dynamic trend band. New buy signal or new buy chart, new buy channel opening right here. Right when that happens, look, all the dynamic trend bands are matching and they're all stacked correctly. 1 on top of 2, Cobra generally on top of dynamic trend band 1. Pull back the sig line, winning trade number 11. And right here, coming in the later part of the day, which we usually don't trade, but I just want to show you this, classic second level sell counter channel that fails to change the color of the dynamic trend band number 2. You know, some yellow dots and everything thrown in there. Don't worry about it. And all of a sudden they come back up and you see the new buy channel come in and you know exactly what to do. Buy that, pull back the sig line at 1175 and they shoot up again for what is like the 11th winning trade in a row. Now if you're a 4 contract trader, every trade setup is $60 times 4. 60 times 4 contracts is $240, right? And you got 4 contracts, so that's going to cost you about $16. I'm just using 4 as a round estimate. $224 a setup. Now, we just had on this day, which was 10/7, 11 winning trades. If you were a blue-collar working trader, I know you like that concept because it helps you, the comparison I'm giving you to if you worked at your other job or you worked in a factory doing the same function every day. Say you put stereos in brand new cars. See what I'm saying? You got brand new cars and your job is to install the stereos. That's your blue collar working job. You're the expert on stereos, speaker installation and all that. So you're making $224 per setup and you had 11 winning trades. After commish, that's $2,464. That just gives you the theoretical, hypothetical example. If you took all the trades on this day and you knew the rules really well and you could follow them and the market didn't flip you out a little bit, even if you caught half of those, you would have had a fantastic day. You see what I'm saying? And then the day closes and we go forward. So again, I got about another 5-10 minutes. I want to press quickly through this. Ignore Globex. You're not going to be trading Globex here. You get into a new day right here, coming in right here. You can see if you're going to trade off the opening, it's a second level trade. You can look at this in advance. You can see them coming down a choppy way, a counter move. But then all of a sudden, all the dynamic trend bands are matching the same color. Down they go. Here's a classic counter move that doesn't change the structure. You had to have caught that pullback right there to the sig line, otherwise they were gone. They just shot to the downside. No big deal. You wait for the next setup. Wait for everything to match right here or spread under 150, 96.75, 95.75. So you buy this, pull back the sig line here, second winning trade in a row. Then they go into choppiness mode. Now, choppiness mode is easy to stay aside from. Sometimes you might get stopped on one of the trades because you got caught in the choppiness. But when you see a downside candle with the matching dynamic trend bands, obviously there's nothing to do there. Then an upside candle, then a downside gray candle, then a sell channel, yellow dots, shooting back up again, blue dots on a red candle with a buy channel. That's whipsaw. The Boomerang's telling you. Boomerang's not confused. It's just following the market. It's telling you whipsaw, whipsaw alert, stand aside. Don't try to figure it out. Just wait until what? What are you waiting for? You're waiting for all the dynamic trend bands to match. So here comes a sell channel. Everything's matching right here. Pullback sig line, and down they go. More whipsaw on the steep downside move here. Let them whipsaw. Remember the rule too, on a big strong move, sometimes you got to wait for a really solid cross. You got to see the crossover, and the new buy channel shows up here. The whipsaw is going nuts. You got the crossover, and just wait here, and then when everything matches colors right here, then you buy the pullback, the signal line, and up they go. See, that's how you tell if the trade's right. Wait for the crossover, wait for the matching colors, then get long, and up they go. Same thing here, counter move. But now here's an example of a counter move, which you notice it didn't produce. It produced a sell channel that didn't disrupt the flat dynamic trend band, but those you're always watching on a flat dynamic trend band number 2 to not trade against that. There was another buy channel, but no blue dots, no follow through. Everything had turned bearish on the DTB number 2. So now you're getting a sell push to the downside, a counter sell channel. So right in here on a brand new crossover, you hit them to the downside there. See what I mean? Same thing here. You can't trade this until the spread is tight. That's the rule. If the dynamic trend bands have not crossed over, you have to have a spread of 150 or less in order to trade them. So now here, it's kind of a interesting little puzzle in that they are spread tight here. Indeed, right here they're crossing over, but it's already the sell channel, buy channel's way over here. This kind of exhausted itself, although they ran up. You just wait. So now what you get is level 1, the classic reversal channel here that fails, the new buy channel, the pullback sig line, and up they go. It's just those two trade setups over and over and over. You just have to know how to work them. Boomerang does all the work for you and identifies these 90% winning trades within the structure here. So here's a fast downside move. Here's a counter move here, which again does not disrupt the color of the dynamic trend band number 2. So you're waiting for that next trade. The sell channel opens up and they just get hit to the downside. So nothing to do here. No modification trade at the Cobra. Why? Because the crossover is way up here. You don't want to trade that. See what I mean? They already got hit to the downside. If you tried to trade them here at the Cobra, you probably would have got stopped out. That's why that modification rule, you got to be very careful with that. Most of the time, you got to make sure the thing's really in a bearish mode. In this case, if you would have traded that Cobra there, based on that rule, you would have got stopped out. It's not a regular boomerang rule. I'm just giving you a modification that you can use if it feels like the right thing to do, and that takes experience. Otherwise, I wouldn't even use it unless you're really experienced. But same thing here. They run down to the downside, crossing over here. Now here's a spread. Now notice this here. The spread is 70 and 68.75. That's within 1.5 points. So you can buy this pullback, the sig line here, and up they go. Beautiful. No counter sell channel here, so there's no second level buy here. You just have to let them go. There'll be another trade right around the corner, but you have to wait. Now notice this is what I'm saying. You got to wait for the right setup. You're long here and you made 3 points at 10:11. Well, things didn't roll over until 11:04. Almost an hour later it took. And that's what I'm saying. But, if you're working at a desk, working in your office, you're sitting there for 8 hours or so or more, and there's all this responsibility and reports to get out and follow-up calls, so many things to do, which is great. It's a good professional job. But I'm saying if you compare that to Boomerang, you had to sit here for an hour and wait for the next setup, but who cares? What else you got to do, right? You're at work. It's a different type of work. You're not relying on massive workload so much as you are relying on your instincts and knowledge of Boomerang and your skill and patience to wait for the right setup. So here's a spread tightening here. Here's a sell channel. There's a pullback signal line. And you put another $240 in your pocket as a blue-collar working trader. You've already got, I don't know, what did we have, 4 or 5 winning trades already that day. A little less, a little choppier that day, but 4 or 5 winning trades. So you're waiting. Here comes the next one. Here comes all this choppiness. Don't let it throw you off. Just watch the matching dynamic trend band colors or the crossover. Here's the Cobra crossing early, and they're just shooting higher. They're just dying to get bullish here, aren't they? But the arrow for the buy channel is way over here, so forget all this. It's too late. You got a crossover, but this is not where you use the pullback to the Cobra modification because it's not the right setup. This is all whipsaw, and it's way far away from the channel. When they cross over here, you can realize that there's probably going to be an upside bias, but nothing to do. Here's the counter attempt to work against the crossover, right? Nothing happens here. Nothing happens here yet. You got a counter buy arrow here, but you still have the dynamic trend band is bearish, so you're still waiting for the right setup. Then you see the arrow, the buy arrow come in here. You with me? Pull back the signal line and up they go. This is all whipsaw in here. You'd be really standing aside here basically on something like this. Not anxious to trade either way, just waiting to see. It's the whipsaw started back here. You got to let it go until you. The general rule is to watch for a crossover, the DTBs, and all the colors to match. The real solid setup here. And there's the pullback. Then it ends up working out. See, that's the real secret, is to get the trades that work out. Same thing here. Counter crossover with a sell arrow. They got the whole thing moving down here. And one could say, well, the spread's really tight here, so wouldn't you want to short here? Yeah, you could, and just face it, it's going to get stopped out. Or consider, too, though, mainly, look at this huge run here. That's really, remember the rule. When you get a big run in one direction, you're better off waiting for the second sell signal. Forget about the first one, because this can often happen where you get a steep run like this. It's a steep dynamic trend band. Now here comes the counter buy channel. Pull back the signal line and up they go. See that? And again, I hope you understand that. When you get a big run like this, look at it in a scrunched up form. It's a huge run up. Second level run up, and this pullback with this dynamic trend band still trending up. You can see it if you put the cursor up there. There's still a nice slice of pizza in there. It's still trending up. Better to wait for a second level sell signal here instead, or to see what happens. Well, these bullish runs lately, they get them going here, and there they go. Get a continuation move and continued blast. The same thing here. Now, because they already tried to cross over here, you can watch and see, maybe this one's going to pan out better. Well, sure enough, now you have the crossover. You have the colors matching. The sell channel comes in here, so don't worry about that because it just happened like lightning. But now they're crossing. Now you can trade this pullback, this signal line, or if you're so inclined here, this is a better, more authorized trade back to the Cobra here. And yes, of course, you're going to look for that Cobra color to be matching the red color as well. But this is that modification I'm talking about. That other one was a little bit weird. You got to just kind of, and have to, every trade's got risk in it. You might take it and think it's right, and then it gets stopped out. Don't worry about it. It's just another trade. So on this session here today, I lost track. I think there's 7, 8 winning trades. Same thing, another $1,000 or so in your pocket. Here's another winning trade here, or at the Cobra. Either way, the Cobra didn't screw it up. The pullback here didn't, it had to take a little heat, but that's part of our business. And that's the next session. So I've gone through a bunch of these sessions. I'm running a little late. I could go through all of them, but you get the general idea here. See? Here's like I said, this one just kind of took off. You got to accept that sometimes they just take off like a rocket ship, and you don't get the right spread. You can't buy the pullback signal line after 6 candles. That's against the rule. You got to have within the 6 candles. If they get too far away, I mean, it may work out, but just you have to be aware that that's not the right setup. You got to wait until they cross over and pull back to the signal line. But in this case, again, a whipsaw counter move that ends up working out okay. You could have possibly traded this one at the Cobra just because you had some intuition that they are indeed crossing over. You're going to take that pullback the Cobra and ride them down. Here you've got, and this is going to happen sometimes, you got the channel opening here. The spread is still too wide here, 40, 37. By the time they match color, the thing's gone, and that's just, it's the way the mop flops. It's not pleasant, but that's the way the mop flops sometimes. Same thing here, steep dynamic trend band, wait. You don't want to take this one at the bottom of the fat channel. This one's ramping up, but again, the stacking sequence, you'd want these to all be a little bit tighter on DTB number 2 here, because they're spiking up from here. 1, 2, 3 candles spiking up. This is whipsaw. You don't want to get involved in whipsaw. You don't have to figure it out. Just relax and let it go away, because here it took off, and whipsaw takes a while to dissipate. Finally here, all the dynamic trend bands are matching. You get a new sell channel, a pullback signal line, they come right down. Do you see how easy that was to figure out? You're just waiting. They've already crossed over. The DTBs are crossed over. So just let them whipsaw around. You need a new sell channel, and you got everything matching color. So you're good to go for a pullback from 62.5, came all the way down to 57.5. Then they whipsawed back up, but you're out of that trade now. You don't care anymore. Same thing, a downside move with heavy whipsaw that caused some disruption to the DTB, so that would be considered a reset. There's no trade here because it's just a huge fat channel off the spike candles that occurred within 55. Within 5 minutes, you got 3, 4 spike candles, and forget it. Now all the trend bands are matching. You get a new sell channel right here, and down they go. Just if you get confused because of whipsaw, just watch for the dynamic trend bands that cross over on that same side, matching the sell channel, and all the colors to match in the dynamic trend bands. Take those trades, and you will not get stopped out. Here's another disruption to the downside trend, but no real trade signal here, because look at the flat dynamic trend band. Trading against that is pretty good assurance you're going to get stopped out, especially when the whipsaw is coming in. See down here? It's where the whipsaw started, 42.50. Big whipsaw candle, 44 shooting up to 49. 5-point whipsaw candle. That's your alarm right there, saying, whoa, 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 whipsaw, too much whipsaw. And now a flat DTB, and they're shooting up higher. Forget it. They're probably going to reverse, which they do, form another fat channel. And this is all whipsaw in here. This whole period is whipsaw. Until what? You wait for the, look at that, insane candle here. 42.50, I remember this one. 48, just madness. Here's the crossover. They're still whipsawing. Let them whipsaw. Let it dissipate. And then when you see everything matching and a smooth upflow, a tap on the Bollinger Band up here, a pullback signal line, and that should get them going. That's where we use the Bollinger Bands, is to watch for the market to light up a new trend move here. Now, in some cases, they'll do it anyway and whipsaw the trade, but many times I'll use that as just another tool that they do want to start to trend up. And the whole climb here was just a whipsaw mess into the close. And generally, this last hour, you don't want to be involved in that. So, again, it was a very rocky last 2 weeks. The markets shifted. They were really fast and hyper speed. You remember that? For about a 6-week period, I couldn't believe it. Every day was a fast market condition. I was just amazed. I was watching it going, my God, they just hyper speed. You got to either, if you don't have the guts to trade it or you don't feel confident enough, just stand aside. Go do something else for the day. Doesn't matter. Crossover, new sell channel, everything's matching, pullback signal line, down they go. If you just waited for those every day, you'd have a lot less trades, but they would all be very secure trades to take. But just use the method of the crossover direct or 1.50 spread. That'll do the trick. That's all you got to do. Just got to wait. And then here again, look at this. 68 in one candle leaping up to 73. It's just whipsaw madness. Here's a crossover. The DTBs are matching, but there's a lot of whipsaw here. If you for some reason you didn't perceive that, I don't know how you could. The 5-point candle, your first caution, then they shoot back down and form a red candle. Then this red candle shoots up from 68 to 71 for a 3-4 point jump higher. A yellow dot on a sell channel with a new crossover. It's all just whipsaw. So just wait. Now you get a new buy channel. Whipsaw stabilized, pullback signal line, and up they go. And again, that was a later in the session trade. Normally I don't take those, but I'm just giving you a chart example of how to deal with those. All right, I'll be going to your questions in a second here. I didn't get through all the charts. You remember, though, this was that period here with this really artificial bullish rigging on the upside we just went through. Finally, they're starting to back off here, and now you got the ES backing off even more, and we'll see what happens tomorrow. Tomorrow you have the Draghi Euro announcing on the EUC, the central banks, to see whether he's going to raise interest rates or lower them. The consensus that he's going to be dovish on that and maybe lower the interest rates a little. So that should then send things into a little bit of a tizzy here. So again, this was the rest of the week. They started pulling them back, and then this was the last few days. They just went nuts and started just jamming them to the upside. But a lot of that was in the Dow, because the Dow is the chief rigging instrument that they, the NAS and all those will be affected by the markets, but most people, not like us traders, they'll look at the they'll look at the Dow and say the market's up 200 points today. See, so they use that a lot to push up the markets. But you can see it's virtually the same routine here. If they swoosh lower, but you got a brand new crossover, trade the pullback to the Cobra right here. And look at that, 54.50. We're just taking 3 points. There's your 3 points right in there in the midst of this choppiness. But you don't, if you try holding out for more, here's 3 points for you. But then all of a sudden, boom, you're stopped out. Follow the rules, follow the method. It'll work for you. Here's a counter move, and then a resell, a swish down. You might try to get a better price here than 675, although 675 was fine. It held. But, trade to the Cobra here would have been nice. If you have that gumption, you see them swish down like this, just try to get a little reversal effect. Get short at a better price if you can. Those are some of the tips that I offer to you. And that comes with experience and time in the markets, and you'll get them. You'll get them. Just a matter of time. So with that in mind, I'll leave the chart right here for now. If you have any questions, you can feel free to answer those now. I'll look back and see what you got. One question on e-signal. The dots, are they supposed to stay on the e-signal version? It depends on your internet. On e-signal, we've had case where the dots will print alarm. They always do that, and then maybe later in the day they might disappear. That's some functioning within the e-signal system and the coding that we did. It's a different code. This is a W plus coding, and it's very stable on these. But the dots, as I mentioned, aren't. You should be looking at the right side of the chart for the price marker to merge up into the signal line, or just watching for the prices here to hit the signal line. Whether you're looking at the marker here, there, don't necessarily wait for the dot. You might even front run it by a tick or two, just in case they actually miss the signal line. But the idea is you're trading a pullback to the signal line, not that a dot appears or disappears. That's a courtesy alarmed dotted system there. But sometimes they might disappear and they'll show up later anyway. Thank you, Angelo. Yes, blue collar working trader. It's a nice concept. I compare it because, again, using the example, I'm just giving an example. I've never worked in an assembly line, but a new car is coming off the assembly line. It gets to a certain stage of development. I'm not sure where. I have no idea. But somebody there is a specialist in installing stereos. They're top expert in, say, this particular vehicle that he's working on. It's usually the same thing every day. He's installing a professional Blaupunk system, Blaupunk speakers. He knows all the coding, how to hook it all up to make it work right. He puts in all the wires, drills the holes, gets the speakers in there, tests everything out. Then he puts a stereo in, troubleshoots that, makes sure all the speakers are working right. There's no buzz in the speaker. I mean, it's a real professional job. That guy is a top expert in that field. And when that stereo is all in and certified, next car. And that's what he's doing all day. I have no idea, but I like that example because it's distinct from the car itself, but that's all he does. And I don't know how fast he can do that or whatever, but I'm figuring maybe his 8-hour workday probably maybe does 2 to 3, maybe 4 cars a day. He gets them all installed. If he's got an assistant, then a little faster, but you get the idea. It's the same routine every day. And that's true of most jobs, really. I mean, there's that excitement if you're in sales and you meet different people and there's different stuff going on. But the general idea, I'm saying this, is the routine I'm giving you of these signals. They're very simple to learn, very easy, and they're 90% correct. So if you just go into the grind of the markets every day, the market will give you a lot of excitement. And of course, if you make a winning trade on 4 contracts or more, that's quite exciting. So it's never boring, but you actually want it to be as same old routine and literally a little bit boring as possible. And you'll be shocked how the market will be flipping around, and all of a sudden, a signal comes in and you get short. You see everything's matching. The dynamic trend band, like here, a second level trade. Oh yeah, this is a second level trade. Oh, there's a dot there. There's the pullback of the new sell channel, and you get short, and within 3 minutes, you're out with $250 or so in profit. And you go, huh. That was easy. And it is. And you kind of, it takes all the, especially if you spent years breaking even or gaining and losing and mostly losing. And it's like, wow, it was almost too easy. Don't complicate it. Keep it simple. Just wait for the next trade, And when you got all this whipsaw stuff, just Boomerang's telling you, whipsaw alert, whipsaw alert. It's not telling you what to do or where to trade. It's telling you to stand aside. And here even, look, it still continues to whipsaw. You just have to wait till you get a nice smooth, everything's a little bit tighter here, then you can go in. But all of our indicators work in sync. You correlate them to work in sync. And I've talked about the stacking sequence. Like, see this? This is a whacked stacking sequence. You got the DTB1 up here, DTB2 down here. I know they're all matching colors. And indeed, this pullback to signal line 750 ran to 275. So it was an authorized trade here. But that's because it's the nature of this trade. But it's a higher risk trade. But the correct stacking sequence is normally you want the Cobra leading dynamic trend band number 1, which you can see it leads here in the color change. The color, then the Cobra 1 or dynamic trend band number 1 changes, then number 2, and they're relatively stacked together. They go up and tap the Bollinger Band, which is like the market saying, okay, I'm heading up higher. You get the pull. This was it. Like this trade is a classic boomerang trade. Taps the Bollinger Band, pulls back, and without any pressure on the trade, shoots right up and gives you 3 points, and you're just going, God, that was so simple. And it is, and you just want to wait for those. You don't want to force agitated trades like in here that they're not ready to turn over yet. When a big move occurs like this, let it grind out, let it whipsaw a little, and then when you get that nice sell channel, the dynamic trend bands are just coming over. They cross over here, smash lower, and ramp up here, and there you go. Second level, same old routine. Isn't it beautiful? A counter channel. You got to see that arrow print, a new sell arrow, pull back the signal line on first, second candle, down they go. Make it easy on yourself. Here's a classic one here. Spread right here is 1.5. You either need a spread of 1.5 or less before the crossover occurs, an actual crossover, or matching colors. Right here you have all three, so you buy that pullback signal line and they shoot up. And you're just going, wow, Boomerang's easy to trade with. And it is, but you have to learn the rules. I was getting a couple signs about the audio cutting in and out. I'm not sure why. I go to webinar every day for some reason. I hope the audio has been good for you. I only had one comment, and I did get a sign from go to webinar there was something, so I adjusted a couple things. I hope that turned out okay.